If there ever was a time therapy would be necessary to stay sane, now is definitely that time. Working in MarTech at the moment is like sitting in a roller coaster and trying to pour a cup of tea while blindfolded. Does that paint the picture for you? Look, big changes are shaking up the customer data platform world. In some recent news, which I find fascinating, Uniphore acquired ActionIQ to build out a so-called zero data cloud. Oh, I'm sorry, I thought I had this thing set to silent. Seriously? All right, well, this just in, breaking news. News has reached me that Lytics has been acquired by CMS disruptor Contentstack, the second CDP to be acquired in a matter of weeks. So, oh, come on. All right, well, there goes my intro. Let me just sum it up as quickly as possible before I get any more notifications here. Uniphore buys ActionIQ, Contentstack buys Lytics, and ROKT just purchased mParticle. Got it? Yeah, I'm putting away my phone. I don't need any more disruptions here. All right, but all joking aside, what started with ActionIQ's acquisition and was likely more to follow, business owners like you might wonder, what does this mean for my data strategy? Should I expect disruptions, or is this a chance to unlock more value, or possibly even get a better deal? History tells us there's no need to panic, and Bruce Buchanan, ROKT CEO, the company that just acquired mParticle, even said as much in a video on their website. Yet, staying informed is key. In this video, I'll break down the impact of these acquisitions and share strategies to help you make the most of this pivotal moment. Or should I say moments? But, any case, let's just dive in. Hi, my name is Matthew Niederberger, and welcome to MarTech Therapy, where we take a zero-copy nonsense look at marketing technology and offer advice on how to keep your stack zen. After watching the video, if you find this information has helped you in any way, please consider liking and subscribing if you're watching this video on YouTube. As data professionals, you know we love to influence that algorithm. Today, we're tackling one of the most significant shifts in the customer data platform, or CDP, space in years. In late December, ActionIQ was acquired by Uniphore, Lytics became a part of Contentstack, and as of January 16th, mParticle was relabeled to mParticle by ROKT. These deals didn't just happen in a vacuum. They reflect a larger pattern of consolidation in the MarTech industry, predicted by Gartner and various other thought leaders. If you're managing a CDP or considering procuring one, this isn't just news to skim past. Consolidation like this has real implications for your current platform, the vendors you rely on, and how businesses of all sizes can leverage customer data to stay competitive. But don't fret too much. There's definitely good news. There's light at the end of the tunnel. Based on what we've seen in similar cases in the past, there's no need to hit the panic button immediately. When Twilio acquired Segment and Salesforce brought Evergage into its ecosystem, customers saw continuity in service and plenty of time to adapt. The same is likely true here, but that doesn't mean you should sit back and wait. So why now? After years of relative quiet, why are we seeing three, no more notifications, high-profile acquisitions in the CDP space? The first answer is saturation. With over 104 vendors identifying as CDPs according to martechmap.com, 101 now after these acquisitions, the market has become incredibly crowded. I've heard stories from contacts in the industry that RFIs and RFPs with 20 vendors do occur. Nevertheless, not every vendor has the human and financial resources to scale or differentiate themselves. Lytics, for example, built strong features like real-time engagement and data activation, but struggled to grow its customer base and secure the funding needed to expand further. The second is the financial market. According to some research, interest rates are expected to decline this year, in 2025, making mergers and acquisitions more attractive. With private equity firms sitting on approximately $2 trillion ready to invest, seed investors are looking for exits. The venture capital boom that fueled the rise of CDPs over the last decade is also cooling off. Valuation gaps between vendors are narrowing, so many investors believe that this is the time to cash out, whether through an acquisition or soft landing. Some even pointed out that mParticle's valuation dropped from $800 million in 2021 to $300 million at its acquisition. Again, this is word of mouth. It has not been verified. But let's face it, running a startup for years is exhausting, and many founders see acquisitions as the logical next step. But look, I'm not a financial advisor. If I were, I wouldn't be here recording these videos in my attic office to tell you about the state of the CDP market. I would be sitting on my 60-foot yacht in the Caribbean, Drinking gin and tonic, shaken not stirred, live streaming my trading activities in real time using a Starlink terminal, and comment reaction baiting on LinkedIn by sharing my pyramid scheme strategies with people who leave a comment with the word gullible. Yeah, I'm talking to you. Now stop it. Finally, there's a strategic shift in how enterprises think about data. It's no longer enough to collect and store information. Businesses need actionable insights and real-time decision-making capabilities to stay competitive. Acquirers like ROKT, Contentstack, and Uniphore are addressing these needs by folding CDPs into broader platforms. These acquisitions are as much about cutting-edge innovation as they are about filling gaps in their current offerings. That said, historical patterns show that existing customers won't face immediate disruptions. When Twilio acquired Segment, for example, they kept the division largely independent, maintaining leadership and platform functionality. Similarly, Salesforce took a measured approach with Evergage, initially integrating it via APIs rather than rushing to absorb it into their ecosystem. What I've gathered, mParticle, Lytics, and ActionIQ will see no significant changes to their platform in the near future either. And I find this excellent news, especially for the end users. But it's not all smooth sailing. Cultural differences between companies can affect service delivery, and integration complexities sometimes lead to technical hiccups or changes in pricing structures down the line. I mean, what was Klaviyo thinking? That initial backlash was incredible. The bottom line is that it's essential as an end user, as a business using one of these products, to stay informed and proactive during these transitions. So to sum it up, CDP acquisitions are happening now at this moment, and they'll probably continue because of market saturation, investor pressure, and probably even evolving enterprise needs. And while these deals are unlikely to disrupt your platform overnight, they signal a broader shift in the MarTech industry, one that's worth paying attention to. Let's get to the heart of the matter. What do these acquisitions mean for you, the business user? First, we're witnessing a shift in how CDPs are positioned in the MarTech world. Platforms like ActionIQ and Lytics and mParticle are becoming pieces of a broader integrated system. Uniphore is leveraging ActionIQ to build a data layer that supports AI-driven customer engagement, while Contentstack is using Lytics to enhance its composable DXP. And mParticle will support ROKT's current activities. These moves make sense for the acquirers, but they redefine what these tools will look like in the future. For businesses, this shift offers both opportunities and risks. On the one hand, integration can simplify workflows. Imagine having your CDP seamlessly connected to your CMS or DXP, enabling real-time personalization with less effort. Contentstack's integration with Lytics aims to do just that, combining customer data with dynamic content for hyper-personalized experiences. On the other hand, this consolidation raises questions about flexibility. Will these hybrid platforms allow the same level of customization and independence that standalone CDPs offered? Or will they become too tied to their parent ecosystems, limiting your options if you use competing tools? These are questions you'll need to ask your vendor as they release more integration roadmaps, which I'm confident that they're working on right now. Another challenge is what's being referred to as the messy middle. It's a term that I found on LinkedIn. I'd never heard it before, but it's interesting to just dive into a little bit. By combining features from multiple MarTech categories, CDPs, CMS, DXPs, etc., these platforms risk becoming overly complex. Businesses may face friction when evaluating or implementing these tools, especially if integration introduces technical glitches or compromises usability. So one salesperson I spoke to also identified the risk of a smaller pool of leads to work with, since the new solutions will cater to a smaller business segment. It's becoming more niche. Let's not ignore the potential impact on pricing either. Consolidation often leads to price adjustments, and while this could make CDPs more accessible for mid-sized businesses, it could also result in new licensing models that favor enterprise clients. Keeping an eye on these shifts will be crucial. The takeaway? These acquisitions are fundamentally reshaping what a CDP can be. Depending on how well they balance innovation with usability, they might make life easier or harder. Either way, they're forcing businesses to reevaluate what they need from their MarTech stack. But now let's focus on you. What does this mean for your business? If you're using one of the acquired CDPs or considering a CDP this year, this is the perfect time to review your solution or your requirements. Ask yourself, is your current platform delivering value? Do the new parent companies, Uniform, Contentstack, ROKT, and whoever will join that lineup, align with your long-term goals? It's worth noting that transitions like these take 12 to 24 months to integrate fully. That gives you time to adapt, but only if you're proactive. Document your critical use cases. I mean, what are the must-have features you rely on every day? Whether it's real-time personalization, audience segmentation, or data integration, having this clarity will help you spot any potential disruptions as the platform evolves. Prepare yourself for potential changes. I mean, while vendors usually maintain service continuity, there can be cultural or operational shifts, as I mentioned earlier. Keep communication lines open with your account representatives and stay informed about upcoming roadmaps or pricing model changes. And I don't mean by the end of the month, I mean 6 to 12 months down the road. These acquisitions also present opportunities. For mid-sized businesses, the increased competition could make CDPs more accessible, with pricing potentially becoming more flexible. For enterprise clients, the integration of CDPs into broader platforms could unlock new capabilities like real-time decision-making or advanced AI tools, allowing you to consolidate solutions and save even more money. Lastly, consider your broader data strategy. The real power of the CDP isn't just what it does today, but how it fits into your future MarTech ecosystem. As AI-driven tools like Treasure Data's conversational segmentation and High-Touch's AI decisioning evolve, the CDP landscape will become more dynamic. Does your current strategy leave room to leverage these new innovations? The bottom line is that the CDP market is changing, and so should your approach. Stay informed, stay flexible, and don't hesitate to ask hard questions about where your MarTech stack is headed. Oh, and did I mention Treasure Data's approach to the situation? Although they're not being acquired, no messages on my phone again yet. They are offering a CDP trade-up program. As hilarious as that sounds, the truth is unavoidable. This is a buyer's market, and you, as a business owner, should be making the most of the situation that benefits you. All right, so what are your next steps? First, don't treat these acquisitions as just another industry headline. Whether you're using a CDP or not, now is the time to reassess your strategy. Start by asking your vendor the tough questions. What's their roadmap post-acquisition? How will these changes impact your specific use cases? I mean, are they committed to maintaining the features you rely on most right now? Here's my challenge to you. Use this moment as an opportunity. The MarTech market is changing quickly, and businesses that adapt will come out ahead. Whether it's rethinking your current stack or exploring what's next, this is your chance to ensure your data strategy is built for the future. Thanks for watching, and as always, I'm here to help. If you're grappling with these changes or just want to chat about the future of MarTech, about your CDP uses, please reach out. Until next time, this is Matthew from MarTech Therapy. See you soon.